The US government just did something almost no one expected. It bought back $10 billion of its own debt in a single day. Sounds like good news, right? Wrong. Investors were lined up to dump nearly $30 billion worth of bonds at the same time. Almost 7 times more than the Treasury could handle. So here's the question: if the safest market in the world suddenly needs its own government to prop it up, what's really going on? Because the truth is far more shocking than you think, and it has massive consequences for your money. Most people don't care about bonds. They seem boring. But here's the thing: the US bond market is the backbone of the global financial system. Bigger than stocks, bigger than crypto, bigger than almost anything else. Every government program, every war, every bailout, it's all funded by the US Treasury issuing bonds. And right now, the very foundation of that system is starting to crack. In June, the Treasury ran the largest buyback in history, $10 billion. But remember, that was just a fraction of the nearly $30 billion in bonds investors tried to unload that day. That's not strength, that's desperation. So why are investors suddenly running for the exits? Let's dig deeper, because the answer tells us something terrifying about the future of the US economy. On the surface, these buybacks look responsible. Like paying off your mortgage early. But in reality, it's just a shell game. The government isn't reducing debt, it's swapping long-term bonds for short-term IOUs. Think of it like paying off one credit card by maxing out another. Why do this? Because short-term bonds carry lower interest rates, at least for now. But that doesn't solve the problem. It just kicks the can down the road. Meanwhile, the national debt has exploded past $37 trillion. Servicing that debt is getting more expensive every single day. And here's the kicker: the real reason for these buybacks has nothing to do with being responsible. It's about survival. So if the government isn't paying down debt, what are they actually trying to hide? Here's where things get scary. Since 2020, the bond market has been in its worst bear market in history. The 30-year Treasury yield spiked to 4.83%, the sharpest move since 1982. Moody's downgraded US debt for the first time in years. Investors are demanding higher and higher returns just to lend money to America. This creates a vicious cycle. The more debt America issues, the more expensive it gets to borrow. And the more expensive it gets to borrow, the deeper the hole becomes. So ask yourself, if US bonds, once considered the safest asset in the world, are now seen as risky, what does that mean for the entire global system built on top of them? The buybacks aren't about paying off debt. They're about propping up confidence. By stepping in as a buyer, the Treasury creates the illusion of demand. But behind the curtain, real buyers are disappearing. Bloomberg's liquidity index hit its worst level since the 2008 financial crisis. Think about that: liquidity is now worse than during the collapse of Lehman Brothers. And foreign investors aren't blind. China has already cut its holdings of US Treasuries to a 16-year low. Why? Because they saw what happened to Russia, whose bonds were frozen overnight. No one wants to be next. Which leads us to the big question: if foreign buyers are walking away, and the US government has to step in to fake demand, how long can this illusion last? Because history shows us, once confidence in a debt system breaks, it doesn't come back easily. Let's be clear, this isn't about responsible management. This is about buying time. Without buybacks, yields would skyrocket, debt servicing would spiral out of control, and the system could start to unravel. So what does Washington do? They paint over the cracks with a fresh coat of confidence. But you and I both know, a coat of paint doesn't fix a crumbling foundation. It just hides it until the collapse becomes unavoidable. And while Wall Street cheers record stock highs, the bond market is flashing red. Here's the harsh truth: the fiat system is a burning dumpster. It always has been. And buybacks don't fix that, they just delay the explosion. That's why Bitcoin exists. It can't be printed. It can't be manipulated by Treasury tricks. It's not about politics, it's about math. When the world's biggest bond market needs artificial life support just to function, that's your signal. The red flag isn't just $10 billion, it's the entire system. So now it's up to you. Do you keep trusting the illusion of safety in US bonds, or do you start protecting yourself outside the system? Drop your thoughts in the comments. And if you're new here, hit that subscribe button, because while Wall Street hide,